Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, which sectors leading the market, and what to expect short-term and medium-term. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome to new subscribers. Again, the difference, my background and the difference from maybe other services is that my background is technology, computer science. I have a master's degree in computer science. We have a team of financial engineers that are building new models. And I'm using these models to manage my own money, right? And you can see that in the live trading room or recordings. So that's the main difference. So we're very AI-driven, technology-driven when it comes to trade ideas. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we get into our trading plan, let's see, we had unemployment data. Better than expected. Looking at the 10-year yield for this week, each candlestick here is 1 week. We have a pretty sharp pullback in yield. It was the expectation after Powell's testimony this week that interest rates will be lowered probably sometime in June, right? So I think there's 70% probability. We do have CPI data, so he did reiterate that data-driven, but he did say that, that we're getting close, basically, to, having enough data to support a rate cut. So I think a lot of it will depend. Unemployment came in, just as expected, strong wage growth, healthy, employment market. So no issues in terms of non-farm payroll, unemployment rate, and hourly wages. So the next event is Tuesday, core CPI, right? That's the kind of the last piece of the puzzle to make sure that kind of all stars are aligned for the rally to continue. But so that's the only kind of risk to this rally. Assuming that CPI comes in within the expectation, you can see a sharp drop in interest rate, which is bullish for the market. We have a pretty sharp drop in dollar, which is also bullish for the market, for the equity market. And then the VIX is at 14 level. Value stocks, another strong performance of value stock this week, continue to make new all-time highs. These are your banks, major banks. These are your transportation and industrials, right? Technology, we're making marginal new highs, right? So we did have a breakout last week. We traded flat for 3 weeks. We had a breakout last week and marginal new highs in technology. Spiders based on the values, because value stocks are outperforming. People are selling Apple, right? They're selling Google, they're selling Tesla. And they're raising that money to rotate into value and risk on asset classes. So the value, we talked about banks, right? Wells Fargo, Citigroup, JP Morgan, we traded those this week. And small caps. Small caps made new marginal highs last week, right? Breaking through the multi-year overhead resistance. And was able to basically August of 2022, and we have another green candlestick. These are the most sensitive to interest rates, whether it's small caps. You can see the same performance in gold. Gold is at all-time high, right? Kind of a very strong breakout in gold on above average volume. And these are all interest rate sensitive sectors. ARK Innovation, I looked today, no new signal, but it is outperforming today. It's kind of just like small caps, it's following small caps, it's lagging behind. small caps, regional banks also lagging, right, because of the still some liquidity issues in New York Community Bank. Looks like an exception, but nonetheless lagging. And biotech. Biotech reversed this week, kind of didn't make new highs, and it looks like it's ending the week on a down note, but did break out and outperforming, ARK Innovation. So the biotech, small caps are outperforming. Let's see. So we talked about gold. What else is interesting? Germany, right, or Europe in general, had a pretty strong, despite that they're possibly in recession. Germany and Europe continues to perform well, and another green candlestick. New highs, basically trying to recapture all of the losses since 22. What else is interesting? Obviously, NVIDIA, you have kind of a, I don't even know if it's a vertical, it's just almost straight line, right? 90-degree angle. Usually it's 45-degree, this is 90-degree angle. So NVIDIA continues to go higher, and Bitcoin, I think, is making new all-time highs. Yes, Bitcoin is at 70,000, making new all-time highs. So definitely risk on, high beta stocks are outperforming, biotech outperforming. You have banks are, well, Fargo has a very strong performance, has another, basically recovered all of the losses, right? Kind of just vertically move up. Industrials in general, like General Electric, right? Acts like NVIDIA, right? Vertical move up. And that's, and crude oil, I forgot to talk about. So we talked about NVIDIA, Bitcoin, and crude oil. Crude oil looks like no new signal. It's still facing this downward pressure, downward overhead resistance, and no new signal. So for now, kind of trading sideways. In China, let's see how China actually ended with the red candlestick. So it's kind of looks like it broke out, and now it's trading, trying to recapture that 23 level. So still kind of, I'm not sure if this breakout is sustainable for China. But you do see Apple, right? Let's see how Apple ended. So Apple, pretty decisive, pullback to, what is it, 62% retracement. So it retraced 62% from 22 low to 23 highs. Pretty sharp pullback in Apple, pretty sharp pullback in Google, even though it's off the lows. So it's recovering nicely off of almost 100-day moving average. But nonetheless, pretty bearish price pattern, and similar Tesla. Red candlestick, but it looks like it held to the 2024 lows. So you do definitely see rotation. So the question is, what's next? Right? So let's look at the position. So March 15, expiration, and then April 19. Okay. So in terms of positioning, right, we're looking at the dealer flow, positioning in terms of where's the highest interest at which strike prices. Could you go back to an Apple, possibly entry point? Okay, I'll talk to, yeah, let's go through, let me finish these levels and then we can go through an Apple. So green is March 15, which is 1 week, right? So 1 week, probably, I mean, there's mostly position is 520. We're already at 517, 520, 525. So there is, by next Friday, I think it's possible to get to 520 if CPI data is better than expected, right? That's probably what, just 1 to 2% gain. So it's reasonable to assume another 1 or 2% gain if CPI is better than expected. And then in terms of April, going into the next earnings cycle, pretty significant overhead resistance is at 530, right? So on one hand, we can get to 530, right? That's another maybe 3-4% to the upside. You have position in 530 and then 540, somewhere between 530 and 540. On the downside, in terms of hedging, 500. So it looks like there is pretty large put buying around 500 level. Okay. So $500, maybe, you know, we're talking about going into the next earnings season, so for the next months. 500, that would be 20 points to the downside. That's one scenario. The other scenario is 20 points to the upside, 535. So scenario number one, CPI comes in better than expected. Earnings season is over. There's a lot of, you know, optimism, right, in terms of soft landing, that interest rates will continue to go lower. Everybody's buying NVIDIA calls, and the rally continues, right? That's scenario number one. Scenario number two, interest rates, you know, CPI comes in hotter than expected, right? And market kind of hasn't had any break since October. And then we do have, you know, 4 or 5% pullback. So scenario number one, we're hitting 535 first between now and April 15th, or you know, we have CPI, we have March expiration that also, you know, combined with you know, CPI could cause a pullback if it comes in worse than expected. Then 500. Give me 1 second. Okay. Any questions? All right. So how many of you say 1, we're going higher? And how many of you say 2, we're going lower? Mark, 2. Okay. Andre, BJ, Don, Joseph, Mark, Martin, Peter, Raul, T, Michael, Steve, reluctantly 1, 1, 1, 2. All right, so we do have half of the people said 2, half of the people said 1. I'm gonna go reluctantly with Joseph 1. Right? I think just like unemployment data comes in kind of within the expectations, GDP, you know, strong growth. Fed is very supportive, right? Powell's speech was supportive of a soft landing, and you know that possibly they have enough data to lower the interest rates. So unless there is some negative surprise, I don't know, maybe it's more than one regional bank, you know, has liquidity issues, maybe you know, commercial real estate, that's all the debt that's coming due this year, causing some balance sheet, you know, in regional banks issues or banks. So unless we have some kind of a negative surprise, a catalyst, right, I think the path of least resistance is to the upside. And I'm going to assume that CPI data will come in as expected, right, that it trends in lower, supportive of soft landing, and Fed lowering interest rates, and you know, kind of following this trend of interest rates, right? As long as interest rates continue to deteriorate, then market will rally. You know, if we have reversion, you know, if it reverts back to 440 after CPI data, well, yes, then the market will pull back. So it's all about Tuesday, I think, and I think Thursday, right? PPI is Thursday. Right, PPI is Thursday. So those are the main data points. Looking at the stock forecast toolbox, model is turning that, you know, we're approaching that 520 level, which I think is going to at least pause for a little bit. It doesn't see a lot of momentum above 520 in the next 10 days. So I agree, at least into CPI data and PPI, 520 is overhead resistance. So then Tuesday, if CPI is better than expected, we'll probably break to the 520 level, especially with March expiration, and a lot of these 520 calls will expire, start expiring. If you look at the 6 months prediction, obviously it is model basically saw 520 as overhead resistance, right? That's the prediction for the months of March. We're already at 520. So stock market is overbought by any stretch of imagination, but if CPI data does come in positive, then the model does see that potentially we can get to 537, right? Between now and April, get to 537. I think that's between the positioning and between the neural network. That makes sense. Okay, so those are the probably distribution of possible outcomes, right? So how do we help Tradespoon? What do we offer? So again, neural networks, right? So you have stock forecast toolbox where you can make analysis that I just showed in terms of support and resistance, right? If it's at 515, 517, maybe the market is overbought and consider buying at 507. For now, trend is neutral, right? There's no strong momentum. Market is overbought. That's what the model shows. I mean, you can put in stock like NVIDIA, and it just shows you that as of right now, there is a strong uptrend, right? And every day we're just making, NVIDIA is up 10%, is this right? No, that's not right, 3%. NVIDIA is up 956. I never really got that quote. Oh, it was at 974. Reversed. I missed it. Okay, so it looks like NVIDIA, almost got to the 1,000 level and pulled back. So yeah, so it does show you that NVIDIA, stock like NVIDIA has a very strong uptrend and continues to outperform. So that's stock forecast toolbox. We do have seasonality, right? If you look at the seasonality, we haven't looked at that for a while. So February, beginning of March, usually kind of a sideways price action, but then second half of March, going into the April, that's from seasonality point of view, you do have a strong rally. And I think, after CPI, PPI data, if there is no negative surprise, from seasonality point, it could continue pushing market higher. So now you have another data point that supports that 530, 537 levels on S&P. And then in terms of models, you have different trade ideas every day. So short-term model, active trader, every day it provides you basically with 3 ideas, right? So for today, it says model basically finds the most optimal models, right? The algorithm finds the AI trains on the data and finds the best model, right? There's a library of these models, neural network models that you can find on the internet. And then it finds the model, for Amazon, Synchrony Financial and NVIDIA, right? And basically says, at what point do you want to buy? At what point do you want to sell? And shows you based on the inferences, based on the training and learning, it says that these are the stocks that should continue to outperform. On the short-term trading, it's looking for 1% gain, right? So if you buy in Amazon at 172, then exit out at once you get 1% gain. Divide the trade into 2, right? If you're doing day trading, or if you're doing short-term trading, holding for a couple hours, maybe a couple days, 1% target gain, 1% stop loss, and divide the position into 2, right? So the idea is that if you are approaching your stop level, right, that you are down less than 1% of your portfolio, right? If you divide the position into two. If you do it in one, then it's 2.5. If you do it two, then 1.25. So if you're doing day trading, you do want to be, you want to risk in generally less than 1% of your portfolio. So these are the signals, short-term signals under active trader. And there's a library of them every day, and you can search, you know, what was yesterday, Qualcomm was yesterday, and then I usually try to give few examples every week, right? So I did Qualcomm, right? I did Marvel trade, I did Qualcomm. Where I bought 195, closed at 172.88, so was able to capture, this is almost, what did I capture? 80 cents, so 0.5%. So capturing 0.5% or 1%, right, in a short period of time. So that would be an example of what you would see in Elite Circle. Elite Circle, I basically use active trader or I use weekly trader, similar, I mean, different models, but it makes predictions for longer period of time, right? It basically said on Sunday when the model ran, it basically said that, you know, growth, you know, shares, Russell 1000 growth shares, you know, should outperform the market. And you can see it has significantly outperformed the market. So these are longer term, you know, longer term trade ideas, right? NVIDIA, TRV. So you have three ideas for weekly trading. You can see that if you entered at 328, it suggests to exit at 335, right? So this is 2.5% target gain, 2.5% stop loss because you're holding position. Weekly trader, you know, the idea is to hold it for few, you know, week or a few weeks, right? Where the active trader, the idea is to hold it for, you know, a couple hours or a couple days, and you're looking for 0.5% to 1% gain. And then monthly trader is similar fashion. Again, the most important is risk management. I propose to have 4 positions at a time with maximum loss of 2.5 account value. So that's active trader, weekly trader, monthly trader. We talked about 4 stock forecast toolbox. We talked about seasonal chart. I think probability calculator. People you like to use it. It basically shows you support and resistance, right? 500, 527. This is using historical volatility, right? Not implied, not neural networks, not positioning, but historical, and basically coincides with the positioning, right? So 500, 527, next 50 days, reasonable to expect reaching one or the other outcomes. I mean, it shows you what the current trend, we think the current trend is, right? Actually lower, right? We think that market is overbought based on this model. And that's the probability calculator. You can enter any ticker to analyze. What else? So Elite Circle, this is where you can participate live, right? And I trade active trader, weekly trader, and monthly trader, right? I have long-term position, short-term position. And the idea is I do try to give examples of different strategies, right? So here I did Marvel butterfly, right? I sold 2 195 contracts, 95 calls, and bought 16. Sold 2. No, wait. Where's Marvel? Sorry about that. I sold 2 contracts of calls, right? 100 calls, collected 250, and then bought 95 call and 103 call. So spent $3, collected 2.5, right? So for small amount of money, you know, 50 cents in this example, and same thing on a put spread, I did butterflies with the idea that Marvel is gonna either hit a home run or it's gonna sell off, right? So that's iron condor. And you can see if you look at the 15 minutes, it did pull back, right? It was down as I think in after hours it was down. Let's see. It was down as low as 70, right? When it opened after the earnings announcement, it did drop to 70 level. So if you look at the so obviously it came very close to the strike price selection, 70, because you do see you have a large positioning between 70 and 75, right? This is again positioning of Marvell before the earnings announcement, right? So most of the positioning was between 70 and 75 in case they guided lower, which they did, right? Not, or at least not as much as everybody anticipated. So you have a lot of call buying. So on the positive surprise, it could have got to 100, right? That's 90, 95 is the largest open interest in terms of call buying. On the downside, people were selling 70, 75 puts. And, you know, we're trading at 78, right? We're trading at 78. So it did get to my strike, but didn't get lower enough. So that would be an example of how would you do a butterfly, right? How would you do a butterfly? All right, any questions? So this is a market neutral strategy. And then, you know, Qualcomm was example of the short-term trade where I, using active trader, was trying to capture 0.5% to 1% gain. Silver is an example of longer-term trading, right? I've been bullish on gold and silver, so gold and silver continues to rally. So I'm trimming, you know, my exposure to silver. So combination of both stock and option trades. I do use either butterflies or spreads or condors. So you do get, the most important, you get access to live trading room, morning bell and closing bell, and then you can watch the recordings. I encourage you to watch the recordings because that can help you determine, learn, right? Because if you just look at these signals, it's very hard to decide, you know, why did I do this Marvell trade or why did I trim silver? But if you watch the recordings, then hopefully it'll be a lot more clear. In ideal world, you want to participate live so you can ask questions and I'll be more than happy to answer them. And we do have morning bell and closing bell. You can always enter your phone number and get SMS message, or we're using Discord server. You can get the same idea. And so that is Elite Circle. If you just want stock trade, we do have Robo Investor. If you want only option trade, we do have Premium Portfolio. If you just want to follow my trades, Shadow Trade or Spread Trader, where you just follow my spread trades or follow all the trades. So we do have a YouTube channel. So every Wednesday you get you can. I encourage you to subscribe to Tradespoon. Find Tradespoon on YouTube. And then every Wednesday, there's a live trading room, right, which you can also participate. And what else? Any questions? Okay. Looks like NVIDIA is pulling back. All right, any questions? Oh, Joseph, sorry, Apple. I apologize. Could you go back to Apple possible entry? Okay, so let's look at Apple, possible entry on Apple. I mean, Apple is oversold. It is, at some point, was a Magnificent Seven stock. Probably not anymore, but it could come back. So, I mean, people are definitely rotating out of the Apple and mega cap. Well, not all mega cap, but you could see, I don't think any of them are making new signals. Well, NVIDIA is, so let's put NVIDIA aside. But Microsoft, let's just review that. Yeah, Microsoft is not making new signals, right? It's trading sideways for a few weeks. This is weekly trader. We've seen Google is significantly lower, Tesla significantly lower. Let's see Netflix. Let's look at Netflix. Netflix, I mean, it's doing a catch-up trade this week, kind of no new signal, I would say. And then Meta. Meta is making new signals. So at least Meta continues to grow and continues to go higher. And I think Amazon is marginal new highs, basically retesting 2021 highs. So the Magnificent Seven, except the NVIDIA, are underperforming the rest of the market. So usually, so that's something to consider. Let's assume that trade doesn't last too long, then Apple, you do have a well-defined level, right? That's October lows. We're basically retesting October lows. Apple is going to be in big trouble if it breaks through October lows, right? If it breaks through this 167 level, which it's tested this week, well, I don't know where the bottom is. Well, it could be 130, right? I mean, I'm exaggerating, probably not. There is probably other, 50% retracement. 50% retracement is 160, right? So if it drops below 167, immediately 160, and then if 160 doesn't hold, well, then, you don't know where the bottom is. So I mean, the pattern looks pretty bearish. So personally, I would wait at least for 1 or 2 green candlesticks, right? Like something like that, right? You have downward pressure, then you have some kind of a consolidation for a few weeks where it's not making new lows, right? So I would wait a few weeks, maybe probably till earnings, right? I would say I would wait till earnings and just see if they can get back on the path of growth and taking care of AI. At some point they will. I just don't know which quarter. Is it in April, or is it going to be in July, or is it going to be in October? So I would wait at least a few weeks of stabilization where it's not going lower and this level holds, right? Like if you're a long-term trader. If you're a short-term trader, you basically can say, Vlad, I can try it, right? And just enter at this level. If it drops below 160, exit, right? So 10 points to the downside or 15 points to the downside, but it can get to the highs, right? So that's another approach. In terms of positioning, let's see. So the lows, October lows, 167, 165. So let's see how well is 165 level is defended, and if there's a lot of put buying. If there's a lot of put buying, then maybe it makes sense to take that risk. But April 19, March 15. Okay. So in terms of Apple, there are a lot of people think it's going to go to 190 level, right? So there's a lot of call selling at 195. There is a relatively large, well, people are selling puts. So people are selling 165 put, and that expires next week, and they are buying April 19th. So assuming 165, 167 level holds by next Friday, and these short puts that expire on Friday next Friday will, expire worthless, then 165 level is pretty well defended. This is April 19th. I mean, this is expired this week. So somebody's doing calendar spread, right? Selling 165 that expires this Friday versus next Friday. All right. So calendar spread, somebody's putting a lot of positioning in that trade. So we're at 171. So these will expire worthless. These are long, and then you still have short. And then some April 19th. So, I mean, it's a pretty vulnerable position, right? Because the red is the weekly. So you have pretty large positioning in short puts that expire today. They will expire worthless. And then there is still a lot of short puts, right, that expire next week. So, I mean, it's the same picture that I've been saying. If 167.5 level doesn't hold next week, right, after CPI data, there's really no defense. April 19, the green line, I mean, it's negative, right? So people are not hedging. So unfortunately, when it comes to Apple, nobody's buying puts because they think that 167 level will hold, right? Just like I said. So I would at least wait for CPI data, because if CPI data does come in harder than expected, I think Apple is going to lead the market to the downside because there's no hedging, right, for Apple stock. If there is a positive surprise, Apple could reach 190 level, right? Pretty sharp demand for this call. So in terms of positioning, what I see here is that most people believe that by going into the next earnings season, by April 19th, Apple is going to be at 190 level. Okay. So that's one outcome. That's positive outcome. It'll get to 190. Negative, if CPI is harder than expected and Apple is the weakest link, then I think we can quickly drop through 167 level, and there's really no support on any of these levels. All right, people are not hedging Apple. Did NVIDIA the reason, Ernest? NVIDIA rolled over. I mean, this is kind of a classic. We'll see where we're going to close. We'll see where we close. But NVIDIA was up, I think, 10% today, right? 974.70. So when did it open? We'll flat 70. So 8%, right? So NVIDIA was 8 to 9%, and you have reversal, right? Sharp reversal. I mean, it could be people are taking profits, right? It could be people are taking profits. I mean, I don't think there's any news, news in the market. I mean, yield is stable, dollar is stable. I mean, QQQ turning negative, spiders turning, flat, small. So it could be just people are taking profits, right? I mean, ARK is still higher, small caps are still higher, regional banks are still higher. You do have a role, yeah. So usually, I mean, we've seen these reversals in NVIDIA in the past, right? Where we have a couple of days where there's a reversal, right? It pulls back and then bulls step in again. So I mean, usually these blow off top patterns end at some point. The question is, at what point does it end? In terms of position for an NVIDIA, there's, I mean, basically every 100 points there is a large open interest. All right, so if you look at the NVIDIA, So you have this enormous positioning, right? Enormous positioning at 1,000, right? So it reached 1,000, right? Got close to 1,000 and it pulled back, right? So at least now there is some kind of a pullback. I mean, the next large positioning in terms of, well, let's take April. Well, yeah, so March, you know, we're almost going to be gone, but there's large positioning with 1,000 and people, it expires basically next week. So people were just taking profit. But the next one is, you know, not the same size, but relatively large size, is at, you know, 1,100. So that's probably one of the reasons, right? Because such a large position of open interest that expire next Friday, it reached 1,000 level and people were just closing those positions. Now we're taking a break and we'll, you know, the next level is, you know, well, first it has to hold this 1,000 level, but then, you know, to 1,100 level. Thank you, Joseph. Ernest, thank you. Thank you for participating. Vision products were a huge success. China sales down. They closed their EU project, which must cost billions of past several years. Nothing good happening now. Yeah, I mean, they're obviously, they need some good news. They need to show the investors that they're going to benefit from AI, right? And they're going to benefit from, and they're going to go back on path of growth. And you know, until then, people rather buy, you know, Nvidia and and you know, General Electric. All right, 10:14. That's all. Any questions? So if you guys are not Elite subscriber, please, you know, subscribe for Try Elite. You know, we do give 30-day money back guarantee, and try to participate live in live trading room or weekly strategy roundtable. If you're watching this recording, right, hopefully next time you can make it live. Obviously, if you cannot make it live, try to spend some time watching the recordings. That's all I have for today. Have a great weekend, and I will see you soon. Thank you. Thank you, Kevin. Thank you, Joseph. Tesla, yeah, it's more feature. All right. Okay, guys. Thank you very much. Appreciate your time. Have a great